welcome to today's more important analysis videos with me, Rich Market Analyst at Hantec Markets. The markets are still responding or reacting to the Fed meeting last night. We had some dollar strength, some significant dollar strength, and also yield, treasury yields pushing higher on the back of that Fed meeting. And that came as there was a hawkish surprise. The Fed didn't hike rates, and they initiated balance sheet reduction. That was fairly much guaranteed yesterday, but there was a surprise in the fact that the Fed did not bring down or did not question its dot plots for 2017 and 2018. Basically, the dot plots are still continuing to suggest a December rate hike and also 3 further rate hikes in 2018. So what we have seen is Treasury yields pulling higher. Here you can see the 10-year. We've also got the 2-year pulling higher as well. That actually above 144.70 is the highest level on the 2-year since June 2009. So interesting move there, and also the strengthening of the dollar. But I'll show you a little interesting chart as well. Is the 2s10 spread actually fell, and that is due to the fact that the inflation forecast is still pretty much sort of questionable, really. The Fed brought down its inflation forecast, which actually slightly flattened the Treasury yield. The Treasury yield curve. And that suggests that the market is still concerned about inflation, even if the Fed does not appear to be. And it'll be interesting to see if that sort of plays into trades in the coming days. But certainly the dollar strengthening yesterday actually pulled back a little bit today, which is interesting, as sort of some of these markets have come back into support zones. But the key sort of breaks that we have seen on dollar yen and also gold have continued to go in the direction of strong dollar moves. But euro dollar, an interesting support has been found. So how's this affecting your markets? Well, as I said, euro dollar finding support, sterling broadly supportive. The yen remains weak. That's also in the wake of the Bank of Japan meeting overnight. We had no change from the Bank of Japan, as expected. Very slight dissenting impact on the Bank of Japan as well, suggesting that perhaps their inflation targets are not going to be met. So a little bit of a dovish shift potentially. But yeah, we've still seen support coming through the equity markets as well. So yeah, just a minor reaction on equities, nothing too significant today. In terms of what the markets are looking out for today, we haven't got a great deal until this afternoon, when we've got a bit of US data, nothing too significant. We've just had out the UK borrowing statistics. That was better borrowing than we have seen in August since 2005, I think it is. So that's a bit of positive news for the UK government, but broadly speaking, nothing too significant until 1:30, where we get the Philly Fed business at an expectation of a slight drop to 17.2, and also the weekly jobs claims, which are 300,000 expected. But yeah, broadly speaking, nothing really significant to move markets today. You got Draghi speaking this afternoon, though, and that could be something that has an impact on the euro. So watch the euro this afternoon. But my chart today is the Kiwi Dollar, and Kiwi Dollar, or the Kiwi, certainly has been strengthening in recent weeks, and spiked higher yesterday. Actually closed out above that resistance that comes in around 73.45. That closing level above that actually completed a head and shoulders reversal. And what we have got is, or have had, is a pullback to that neckline on the Fed. Now, what I've said is 73 to 74.45 is a basis of support. 73 figure area being a sort of an old sort of support as well. And 73.45. So you could argue that's a buy zone, but if the market just starts to drop below 73 figure, it's not disastrous for this recovery until you see 72.45 broken, I think, really, and then a big breach of support of 71.80 would really sort of start to generate downside momentum, I think, again. But for now, I'm still thinking that this is a base pattern holding on, and arguably it sort of suggests that we're going to get a retest of the highs again, 75.60 coming in. So it'll be very interesting to see if the Kiwi, which has been strengthening recently, can continue to hold on to this support above 73 figure. I'm taking 73 figure, as I said, as a sort of a near-term buy zone, but it'll be very interesting to see the reaction of this today, because initially that 73 figure level has been tested and arguably held. So the sort of pull back to the neckline has been seen. It's just whether the bulls can maintain this support. But a close back above 73.45 today, for example, would be a positive move, certainly, I think, on this market. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.